Good afternoon, everybody. I'm Michigan State Senator Lana Tice, and I'm going to be chairing this meeting today, the meeting on Joint Federal Relations and International Insurance Issues Committee. It's a mouthful. There's no need for a roll call. Our staff will mark everyone in attendance. I'll first entertain a motion to waive the quorum requirement. So moved. Second by Representative Carter. Motioned and seconded. I'll now entertain a motion to approve the July 17th, 2025 meeting minutes. So moved and seconded. We'll start with a presentation on individual coverage health reimbursement arrangements, or ICHRAs. I actually really am excited to hear about this model. ICHRAs are an emerging health product. I look forward to the committee learning more about them during our conversation today. This topic was brought forward by Ohio Representative Meredith Craig, who sponsored the bill in her home state. So the bill is dealing with ICHRAs. With that, I'm going to turn things over to the good Representative Craig to say a few words.
Thank you. So, Madam Chair, as you noted, I'm currently sponsoring a bill in Ohio. You can view the legislative analysis of the bill on page 184 in your binders. The bill itself is on the website and the app. But the bill is pretty straightforward. It authorizes a non-refundable tax credit for any small business that has 2 to 50 employees who offer an ICHRA. First and foremost, I guess I should ask the room, who knows what an ICHRA is? Okay, so for those that don't, an individual coverage health reimbursement arrangement. This was something that the first Trump administration tried to push forward to, as part of the conversation earlier today, revolved around, the marketplace and trying to get, healthy individuals into the risk pool. So this was formed to help provide an option to employers to contribute a pre-tax amount of money into an ICHRA, pretty much like a health savings account, for an individual to go buy a plan on the individual exchange, so that person can shop around for what works for them. And again, that alleviates the cost and the burden on the employer by allowing the individual to take control of that. So overall, again, the bill encourages, those employers that 2 to 50, right, they are not required to offer health insurance. And so again, the state of Ohio, I think other states are looking at work requirements for Medicaid. And so as that is rolled out, as that's implemented, obviously we're going to want to incentivize folks to get insurance some way, somehow. And so this should help with healthcare choice and accessibility. So it's a great topic for the committee to discuss. Like I said, it's pretty timely following our NEIC NCOIL dialogue. So look forward to this panel and look forward to working with this committee on potentially looking at a model law here at NCOIL. Thank you, Madam Chair.
Thank you, Representative Craig, and thank you for bringing this forward. Now we're going to hear from our panel of speakers. First, we're going to hear from Peter Nelson, Director of the Center for Consumer Information and Insurance Oversight, CCIO? Pronounced CCIO. He wrote that in there for me, so I jumped the gun. Peter, many thanks for being here, and we realize that you're very, very busy given everything that's going on at the federal level, so we're extra grateful for you being here. Please go ahead.
Thank you very much for that introduction, and so I'm really happy to be here at NCOIL. And, we got this. All right, excellent. Legislator, I'll just give you a little background on myself. I know I'm going to speak a little bit later, so I'll keep this very short. But I've been working on public policy issues, mostly at the state level, not the federal level. But as you all know, the state and federal healthcare policy intersect in many ways. And so at the state level, I always had to deal with the federal laws. And I was always trying to think through ways to give states more flexibility within a federal framework across so many dimensions in federal law. And so I come from Minnesota. So in my experience in Minnesota, starting off, we had a Republican governor with mostly a Democrat legislature, and we were thinking a lot of different, more bipartisan opportunities to improve our healthcare system when I started working. And I ended up starting off with some of my first reports were on state exchanges and the benefits, potential benefits of state exchanges. Another report that I led off with was a report on some problems with employer-sponsored health insurance. And not that employer-sponsored health insurance is bad, but they create some obstacles for consumer choice. Usually when you get a health plan through your employer, you really don't get that many options. Oftentimes, you don't get any options at all. And that's, of course, driven by the tax preference for employer-sponsored coverage. And there was always this sense back before the Affordable Care Act was passed that really you couldn't have the type of health insurance coverage through your employer that gave employees choice and gave them basically a defined contribution of dollars that they could then use and go out into the individual market and shop for their own coverage that would then be portable if they left their job. Potentially, if another employer offered a similar defined contribution approach, they could then, in that other job, carry their insurance with them. But fundamentally, it's about choice. It's about being able to, as a consumer, have a choice over your health plan and have more decisions over factors like what sort of level of premium do I want compared to the cost sharing, the deductible amount that I want. And before the ACA passed, there really wasn't that much of an opportunity. There was some opportunities for that sort of arrangement. After the ACA passed, I was very optimistic that this was going to be able to take shape. And the reason why I was optimistic is because the regulatory structure between individual market plans and small group plans pretty much equalized, and that was one of the obstacles. And so there's a lot of us thought you could do that. However, in 2013, the Obama administration issued some guidance that restricted that. And then I spent several years looking at the law and making some arguments that, hey, no, actually, there are some opportunities, you should have some opportunities here. And I had the honor of being hired in the first Trump administration. And when I got into the first Trump administration, we immediately set to work on developing rulemaking to allow what we're talking about today, individual coverage HRAs. And these are health reimbursement arrangements that an employer can set up and put a defined contribution of dollars into the health reimbursement arrangement that allows the employee to pay for an individual market premium and have that choice. And this is a really, this cures a lot of issues for employees over choice and gives them a lot of power to basically define what's good for them and their families. But it's also really important for employers. There's a lot of employers that just don't offer health coverage because it's very complicated. And this can be a simpler way to allow employers to provide a pre-tax contribution for their employees that they otherwise wouldn't provide. But within this structure, there's right now, before the first Trump administration, there really wasn't that structure in place. We put in place rulemaking that provided a structure. And I'll just high-level overview of that rulemaking. One of the issues with health reimbursement HRAs could be that employers would try to separate their employees by their healthy employees and their sicker employees. So we had to draft some careful rules to ensure that employers weren't dumping sick people into the individual market. And so we did that, and that rulemaking is now in place, and I'm really pleased to say that the Biden administration left that rule in place, and I think they left it in place because they saw that there are substantial benefits potentially for some employers in this situation. It's a good option. And we have seen some bipartisan support for these policies. We are seeing the state of Connecticut. They have developed tools through their state exchange to facilitate this. We're seeing the state of Georgia, who's here today. I understand we're making some progress on that sort of front there, maybe. And I think the state of Colorado is also doing some work on this. And I did have slides here, but I'll just admit that I put some slides together because everyone else had slides. I wasn't planning on presenting with some slides here, but I've already, of course, addressed all of these items here. And, but there are some issues that we still have. And that's what I'm really excited to hear about from the panel here, because we issued these rules, and there was that, we have a lot of policies in there to ensure that this works, that we're not undermining the individual market. That doesn't mean there aren't some, those did create maybe some obstacles though, we recognize that. And there are also some enrollment challenges that we might experience in the market, because there's not right now yet, I think, the simplified tool for the small employer to just take off the shelf and use, which is why some state exchanges are jumping into this game to help support that. So there needs to be better support tools for businesses. And there's also just a lack of awareness. And I'll just point out too, one of the reasons why there's a lack of awareness is because right when we did the rule, this COVID happened, and no business was going to change their business, their health benefits at that time. And then when the Biden administration came in, there was some questions over whether this policy was gonna stick. It has stuck now. And so I think moving forward, we're going to we're gonna have some more interest in this. We've already seen a lot more interest, I think, from a lot of companies, and you're gonna hear from one very soon that I think will talk about their focus on ICRAs. And so we're really excited to see that. And we're also just, I'll just conclude with that from a federal level, we see ourselves as facilitators. We want to facilitate this approach to make sure there's a fair level playing field for this approach. One of the things we just did, right ahead of the open enrollment period, we released data for off-exchange pricing and plan attributes to make sure that you can set up those tools. So we're creating the framework for this. So we're still sort of creating that framework right now, and that's where we think once with this framework in place, and with the interest we're seeing from insurance companies and from other states, I'm really excited to see this take off. And with that, I'm going to hand it over to Danielle.
Thank you. We are going to wait until the end of this part of the presentation for questions. Danielle, I would love to try to say your last name, but if you could just say it for us, that'd be better. And then go ahead.
Yeah, absolutely. It's win a key, like winning a key to a car. So I'll make it fun for everybody. But names are hard, so I get it.
Not the first time you've been asked that question.
That's right. Not the first time I've been asked that question. So I'm going to talk a little bit more about ICRA and how it relates to us. So I work at Ambetter Health, which is a subsidiary of Centene Corporation. We focus on Medicaid, Medicare, and marketplace insurance. So ICRA is very meaningful to us. We have it as a major part of our strategy. We want to be able to offer more benefits to more consumers and have them elect those plans under an ICRA. So a lot of us have already talked about sort of the base level of what an ICRA is. I'm just going to highlight some of the key things. So we've talked about it was established in 2020. The Biden administration further reinforced it, where now we're coming back to a place where it's starting to increase in adoption. We're starting to see more and more consumers enrolling under an ICRA. And the reason that they're doing that is because we're finding that costs can be more predictable for employer groups. So they're saving money out of their own pocket from a business perspective and being able to offer that defined contribution or subsidy to their employees to then go choose the plan that's personal for them. So getting into my second circle here of planning on personal, it's really focusing on being able to choose the plan that's right for you and your family as an individual and as a family. And then lastly, it makes coverage possible. We're finding more and more small businesses able to offer benefits to their employees under an ICRA. So we talked about tax subsidies as it relates to small business owners from that 2 to 50 life space. More and more consumers are able to be insured because of ICRA. So I'm all about visuals. I think it's easier to break things down when you look at a big picture. I love to do this comparison here between group insurance and ICRAs just to better set what this looks like. So from a group insurance perspective, employers typically create that benefit offering for their employee base. So they look across their employee base and they decide maybe 2 to 3 different plan options for their employees. That doesn't create a lot of choice, to Peter's point earlier. what we're looking to do is create more options and more individuality when it comes to that consumer's need for healthcare. So group insurance really makes it look like one t-shirt size fits all, and we know that that's not really what works. So taking some of the good things about group insurance and carrying them over and carrying them forward into an ICHRA, being able to offer dollars to that employee base so that they can then elect the plan that's right for them. So you'll see those 5 different images here under ICHRAs. It's really a whole lot more choice than that. I'll give you a good example case that we have. So in the last 2 years, we had a group that implemented an ICHRA with 500 employees. The reason they did that was because they faced a really heavy increase in the group insurance market, over 40%. So they went to their broker and said, what are our options? What can we do? ICHRA was presented to them on the table, and they said, okay, what does this look like? How do we implement this for our employees? It comes with a communication strategy, a plan of attack to help educate those consumers and those employees on what works well for them. They went from 3 different plans to now 180 different options. Now 180 is a huge number, but the cool thing is a lot of the enrollment platforms that leverage ICHRA that help promote it for us will offer decision support. And that doesn't necessarily always mean it's technology-based decision support, but they also have licensed professionals on phone calls to help people enroll in those plans. So alongside an ICHRA, we're also educating the masses of people on how to utilize their healthcare based upon their needs. So why now? Why does this make sense? I mean, I think this is really an important time. There's a lot happening in the world, a lot happening in the US with healthcare. I think it's important for us to have more choice for employers to offer benefits to their employees that are accessible, affordable, flexible, individual. So right now feels like the right time to make this happen. The image that you'll see on this particular slide just showcases that small group premiums are typically increasing at a faster rate than the individual market is. So our individual marketplace that we've developed under the ACA has been able to help us to mitigate those cost increases. Even though we see some increases year over year, and this year especially, we're still increasing at a slower rate than the group marketplaces. So it's important to note that there are other options out there for employers, small, mid, large sizes, and there are plans that are ACA compliant, as well as showcasing options across, HSA compliant plans, PPO options, bronze, silver, gold plans. So there's still a lot of choice there for those consumers. And then lastly, what's next? How can you all help us to push this forward? We want to work with you all to help educate people about what ICHRA is, increase the awareness, increase the adoption, work with local organizations and associations such as Chambers of Commerce to help push forward alongside you all. One stat that I'll leave you with, and then I'll hand it off here to my colleague Brooke, is that there are over 170 million Americans covered on group insurance today. Peter kind of mentioned this, it's a little bit broken. We want to be able to offer more choice. The individual marketplace has roughly 25 million Americans covered today. We don't expect that to be a huge shift, but we do expect ICHRA to be a viable solution for employer groups to offer benefits to their employees. Thanks.
Thank you, Danielle. Brooke, why don't you go ahead? Thank you.
Thank you, Madam Chair, and thanks to all the legislators in the room, particularly those who are working on some of these ICHRA bills that I'm going to talk about, and particularly Representative Craig for her leadership as well. So building on what my colleagues have already spoken about, I'm going to talk a little bit about some of the specifics. The question's been asked a couple of times now, well, what can policymakers do to help advocate and help us advocate for consumers and for ICHRA plans?
Start by introducing yourself, because I did not. I'm sorry.
I'm sorry, say that again?
Start by introducing yourself, because I
Of
did
course,
not. We
yeah,
all
I was
know
just-
you're
sorry,
Brooke,
just
but we need to
about
know where
do
you're
that.
from.
So I'm Brooke Tyner. I am the Director of State Government Affairs for Oscar Health. And for those of you that don't know about Oscar Health, we were a healthcare technology company that was created in 2012. We are in 18 states currently, to be 20 as of January. And we offer ACA individual marketplace plans. We do not do that as our only line of business. So we are expanding our reach and continue to expand our reach into different states and into different markets. And this is a place, as kind of Danielle and Peter have already talked about, this is a place, and ICRA is a place that we look at as being able to expand out offerings and expand out options to our members and to those that are currently either without plans altogether or cannot afford them. So I'm going to talk, you've already heard a lot about what ICRA is and how it works. I'm going to talk a little bit about what's already in place right now across the federal and state landscape. And then I know Martin is going to speak a little bit about what's going on, particularly here in Georgia. I'm not going to go through all these. The kind of the point of this slide is to just show you the state activity that's already taken place that last year or this year and will take place next year. One of the bills that's left off this slide, unfortunately, is the New Jersey bill. There is a bill in New Jersey that creates a tax credit. Most of these bills are fairly similar to what Representative Craig described in the Ohio bill, and creates a tax credit for employers who offer ICRA plans. The Georgia bill in particular has a sunset of that tax credit for 5 years. So they differ a little bit, but most of them are fairly similar. And what the idea behind these bills is to create awareness and to create an incentive for employers to look at these plans and to look at these options, especially those, like I said, that may not be able to even offer plans to their employees. So the education is a really important piece, and using these pieces of legislation and places like this to educate on what ICRA means. And in particular, I do want to point out the Florida bill, and again, Martin will speak a little bit more about this in Georgia, but the Florida bill is a little bit different in that it actually creates a marketplace for ICRA plans in the state, and it creates a platform for ICRA plans in the state. It does not have a tax credit attached to it. So it's a little bit different, but it's similar to some of the activity that Peter spoke about, some of the things that the state-based exchanges are doing to allow a place and to create a place where employers can go and buy these plans and administratively access these plans. So the Florida bill is a little bit different than some of the other tax credit bills that we're seeing. We are very hopeful that we are continuing to advocate for these bills in the different states because we think it's really important, as has already been said, that if we are able to offer additional options, especially in this time that we're in right now, and everybody knows, we've talked about it multiple times already here at this meeting, if we're able to offer multiple options and more affordable options to those who need them, that's where everybody, I think, wants to be. And I'll just close by saying we really appreciate the partnership and want to continue the partnership on the state and federal level. And so my next slide just talks about what's going on with the federal legislation. We do have 2 bills right now that are active at the federal level. And what's interesting about the Choice Act in particular is that the acronym ICRA is sometimes a little bit difficult for people. And it rebrands ICRA as Choice, Custom Health Options and Individual Expense Arrangements, which actually I think explains it a little better. It's a choice option, right? And we're all talking about choice. So I feel that's what's interesting. What's interesting about the other bill from Representative Van Dyne is it is an education bill on ICRA. It does not approach the tax credits. It is a bill that directs the Small Business Administration to do education on ICRA. And we believe that will also be extremely helpful in getting brokers engaged, getting other states engaged. And it's another interesting approach to getting awareness out there about these plans and about what's happening in the marketplace. And so I will turn it over to Martin to talk about Georgia.
Thank you, Martin. Go ahead.
Good afternoon. I am Martin Sullivan, and I am the Chief Deputy Commissioner and Chief of Staff for Commissioner John King at the Georgia Department. And at the Georgia Department, we're very fortunate. We have such strong support in our legislature, especially with Chairman Walker over there, who give us the resources and tools we need to really make sure we accomplish our goal, that there is no wrong door when it comes to finding healthcare options. Several years ago, they gave us the authority to create Georgia Access, which has been extremely successful. That's our state-based marketplace in Georgia that we've gotten 1.5 million people enrolled in. And one of the greatest things as we've gone around and talked to chambers of commerce around the state, different business groups, is that they love that kind of access and support on offering insurance to their employees. And that is where we came up with, and speaking about ICHRAs, and we have branded it in Georgia as Georgia Access for Business. And Georgia Access for Business is going to be a state-administrated platform for managing ICHRAs. And its core mission is to expand access to affordable, flexible healthcare coverage for employers and employees. This is being built in partnership with Georgia Access, our state-based exchange, NFP, and NCOIL Health. Georgia Access for Business offers a turnkey solution for HRA adoption across employer sizes and sectors, and is designed to support both currently insured Georgians and those who remain uninsured, bridging gaps in coverage through employer-funded benefits. Georgia Access for Business provides the digital backbone for HRA setup, administration, and compliance, and it employs our agents, who we currently have over 20,000 agents writing on our state-based exchange, and gives them the training and the certificate programs they need to be able to write ICHRAs. And it leads through our Agent Connect, connecting certified agents with interested employers. The platform will also provide onboarding assistance, plan configuration, and compliance guidance, and dedicated support for navigating both IRS and ACA rules. NFP and NCOIL Health deliver full-service ICHRA administration, including documentation, billing, and reporting, to make sure we provide this is simple and easy for Georgia employers. And this also, our system, the ecosystem, will help simplify the transition from traditional group health plans to defined contribution HRAs. It supports employers seeking cost control and flexibility, multi-locations or remote teams, organizations with low performance and group plans, which I think is highly important. If you've got employers all over the state of Georgia, you might not have, the Kaiser network is not available outside Atlanta. So if you picked a Kaiser plan, your employees wouldn't be able to take advantage of it. So Georgia Access for Business ensures that all stakeholders, agents, employers, and vendors operate within a compliant, ethical, and efficient framework. And why can employees choose Georgia Access for Business over traditional group plans? Because of rising group costs make HRAs an attractive alternative. It enables defined contributions based on employees' class or criteria, and employee empowerment through plan choice and portability, and payroll integration for additional employee contributions. And employees shift from managing benefits to managing budgets, with Georgia Access for Business handling all the complexities. Georgia Access for Business will also help employers understand how ICHRAs interact with the advanced premium tax credits. ICHRAs disqualifies APTCs if deemed unaffordable, and employees may opt out if it is cheaper and better for them to choose with APTCs. Georgia Access for Business provides tools and guidance to assist affordability based on household income versus benchmark plan costs, ensuring compliance and transparency. So, in closing, our department's goal is to make sure every Georgian has access to affordable, quality health insurance, and we believe ICHRAs will help us move forward to reaching this goal by leaps and bounds in the years to come.
Thank you very much. I appreciate your presentations, all of you. I apologize for using first names, but it's easier than attempting to pronounce some of the last names. So thank you. Thank you so much for your grace. So legislators, are there any questions? I can see Representative Dunnigan has one.
Thank you, Madam Chair. A question and a comment. Peter or whomever, if an employer gives an HRA allowance to an employee, they take that to the marketplace, are they also eligible for the advanced premium tax credit?
Within the framework of an individual coverage HRA, they would not be qualified for a tax credit. That would be considered a group health plan that would disqualify them from a tax credit. However, there is something called a qualified small employer HRA, which adds some further complications to this question. And there is a circumstance where they could, if if the employer gives them a contribution that's not big enough to deem that affordable under the ACA framework for a group health plan, if that happens, then the employee can use the employer contribution alongside.
Thank you, but that's going to be a very limited subset.
Yes, that's a very
Right.
limited subset, absolutely. And that's clearly not, not the ideal situation. We would, of course, want employers to offer a contribution that allows someone to buy an affordable plan.
So I appreciate the information. I'm just wondering, so healthcare costs and insurance premiums for healthcare are not going down. So if I'm an employer and I want to control my costs with a defined benefit, maybe I give an employee, here's $400 a month. You go to the exchange, we've got an ICHRA, and that stabilizes my contribution. The employee buys a plan. Next year, rates go up 10, 15%. I still keep it at 400. Somebody's going to pay that. It's going to be the employee. So the sales pitch about being stable for an employer can be true. Same thing is true on an employer-based plan. The employer could say, I'm not providing an increase, I'm just keeping my group contribution the same. But then it's going to be shifted to the employee. They'll have more choices. Maybe they can find a plan, but it doesn't take very long if the employer, unless the employer escalates that, the employee's going to have a challenge. I know in our state, the individual rates are higher than the group rates already. Come January, they're going to be significantly higher. And so that's, your question is, are you better off to be on an employer-sponsored plan where they're contributing? Maybe you only have 2 choices or 3 choices, or you're going to be able to take that defined benefit and go and maybe not be eligible, you won't be eligible for a tax credit, so that your employer contribution's not going to go as far, and you may be better off in not even doing that and just going to the marketplace. But so the question is, if an employer offers an HRA, can I opt out and go get a subsidy, or the fact that it's offered to me, does that prohibit me from getting a subsidy tax credit?
Why don't you go take that? I think you probably have a more fulsome answer.
So the short answer is yes. You will be able to opt out.
Okay. And I understand it's a strategy, like we have employer groups, and they have somebody that's got really high claims. It's just killing their group. And so they want to take them to the indie market to spread out the risk and unload it, it's killing them. So I can see that could be a strategy.
Can I
I'll be-
add
go ahead.
something? Just because I think it'll help. So the other strategy that we didn't talk about today, but I want to call out for your question, is that you can develop eligibility classes across your employee population. So you could say, for all full-time employees in the state of Indiana, for example, we're going to offer them an ICHRA because it makes sense, because the individual rates are less than group in that state.
Okay.
But in your state, where they are not, you could offer a group health plan still, and that could be affordable for both the employer and the employee, and then everybody wins. So this is really just an alternative, another option to try to help mitigate the cost of healthcare.
Thank you, and I appreciate that. It's going to be very state and specific. I've got to say one more time, the concept that this is going to control the employer's costs and define benefit, yeah, but that just means we're shifting it to the employee, and how long can they bear that? And then one other thing with ICHRAs, and it sounds like you're all working on it, George especially, they're clunky to set up. They are clunky, and they're not easy.
Noted.
So that's why Georgia specifically is working on this platform. And there will be a website, and we're working with 2 organizations, NFP and Zizzle, to be able to simplify it, make it easier, and we'll be training agents specifically on it that are ready to sell ICHRAs, so they can hit the market and run and make it seamless for both the employer and the employee.
That would be, oh, go ahead.
I'm so sorry. One other thing too, just I've been in the employee benefits industry for over 15 years, and I think group benefits is also clunky. So I'm just acknowledging that too. But ICHRA is new and young, right? So it's going to be even clunkier. It's going to take us time to build.
All right, they're both
For
clunky.
sure.
This one's clunkier.
Agreed.
Representative, we're going to need to move on. We have some more questions, if you could.
I know, one more. To the Georgia, 1.5 million in the marketplace. What are you going to do with them now that are losing those enhanced subsidies?
Well, we are going to, while I wish we could control Congress, what Congress is doing, we're holding over 100 events around the state, signing up people for coverage. We are having a multimedia to remind people that it's open enrollment. Unfortunately, the state does not have the resources to subsidize the plans like the federal government, but we're doing everything in our control to make sure every Georgian knows their options, whether it's the plan that they currently have, maybe it's a plan that is a bronze plan, and it's why we are the first state-based exchange that is EDE and agent focused, and we encourage all Georgians to talk to an agent to help them figure out the plan that best fits their needs.
Thank you, Martin. Representative Barhorst?
Thank you, Chair. Just wanted to follow up on the hook and the carrot. I mean, obviously sets up a great framework for an option and a choice to have employers have, and that's a great thing. How do we create the vibrant market that goes along with it? And what does that look like in Georgia? Is there any other states that have got the seeds already out there and moving? And how does Ohio in particular help ourselves germinate such a seed to maybe make Representative Craig's bill when it gets through, useful, and we can help her use it?
So I appreciate the question, and I'll let Martin talk a little bit specifically about what Georgia's doing on their marketing. But what I would say, generally speaking, and Danielle referenced this a little bit too, the key to this is getting involvement from people like the Chamber, which we're doing in Ohio. We're actually holding events with the Chamber in Ohio, education about these plans, education about what Representative Craig is doing with her legislation. We are working to do that in other states as well, because one of the issues is just, and I think everybody, all my colleagues would agree with me, people just don't know about this, right? Once they start hearing about it, and once you start describing it, we may have disagreements, we may have questions, everybody has questions, but those are the discussions we want to have. We want people to understand what's available, and then how can we best serve? And to do that, we need the businesses. We have partnerships with NFIB in a number of states that are working with us on this, the chambers, the brokers, and those that are already offering ICRAs in the marketplace and understand the brokers, especially the brokers that already offer and can help us educate. So it's a combination of all of that, I think, right?
Yeah, and I think one of the core things is educating agents, because we see ICRAs really is another great tool in the toolbox to help people get covered. It is, we like to remind people all the time, is the Department of Insurance, we love every type of insurance. We love it if you have small group. We love it if you're on the marketplace. We love it if you have ICRA. We want to have the insurance that best fits you and your employer's needs. And this is the best way. We don't want a single person in Georgia to not have access to insurance. And we think this is another great tool for employers to be able to offer a plan to get their employees to stay if they can't afford small group coverage. Because in Georgia, a lot of times the ACA plans are cheaper than the small group plans. Some counties they're not. And that's one of the great things that when we roll this out in June, July, right around in there, I don't know if it's going to be 100% ready, but if an employer puts in all their information, it might come back and say, hey, a small group plan might be best for you. A QSERA might be best for you. A MIWA might be best for you. So we want to make sure we use this platform to connect agents, employers, and employees with the best plan that fits them. And the best way to do that, I think, is to get, and we're working with agents and companies to get the word out there as quickly as can.
Yeah, that was helpful, and I probably didn't frame the question as accurately as I wanted. When I say vibrant, I mean the carriers and the plans want to be involved in this, and they actually file rates and have plans out there for it. So, like, what does Georgia look like? How many carriers you got? How many plans are out there?
Sure.
And that's how would Ohio bring that to a vibrant marketplace that an ICRA with the tax advantage and an employer administration platform be able to take advantage?
Sure. We currently have 10 carriers writing in our marketplace, and I can't tell you the exact number of plans offered, but it is a significant amount of plans, and we have 159 counties in Georgia. Each county has at least 3 carriers writing in it. So no matter what county you're in Georgia, whether you're in the metropolitan area of Atlanta or you're in the small rural area of Taliaferro County, Georgia, you're going to have options with an ICRA. And you'll probably have more options than you would in some of the rural areas with small group plans, because you're going to have 3-4 different tiers, whether it's gold, silver, bronze. And in a lot of companies, they only offer you 1 or 2 plans. I was talking to my dad about that, who owns a small business. He said, I always felt bad because My employees got the plan that best fit our family because I was going to pick the plan that supported our family, not necessarily the rest of them. So this will give every employee the right to do it. And when my boss is speaking to Chamber of Commerce's all the time, he likes to point out, why do we let employers pick our health care? We never let our employee pick out our car insurance.
Thank you, Martin. We have time for one more question. Senator Lang?
Thank you, Madam Chair. Thank you, panelists. I have a few questions if the chair will indulge me. If not, I'll stick to one. Currently, a large self-funded employer can utilize a MERP to incentivize their employees to move into a spouse's plan. Is an ICHRA limited just to the exchanges, or could an employee use it to pay for coverage available in a plan through another employer that they have access to?
I'm going to let Peter answer that one.
Yes.
I'll try to answer it, but this is also maybe one of those questions that I would need to take back. But what I believe actually, and it's not through an individual coverage HRA, I believe through a different sort of HRA arrangement, which would be a group coverage HRA arrangement, that an employer could establish an arrangement where you could use HRA dollars to help fund a spouse's plan. And these are, but that's a different arrangement than we're talking about today.
So the ICHRA is just for the exchanges?
It's not, it's for the individual market. And the
Individual
reality is, I mean,
market, okay.
Off exchange.
Individual market.
It's the individual market. So
I
it could be
understand.
off exchange or on exchange.
Yep. And my other question has to do with the $400 tax credit. That feels about right. In Ohio, that would be similar to a $15,000 tax deduction, which is probably the equivalent of family health coverage in Ohio in general. But what about, someone did put up there that Texas is looking at implementing this. How would a state with no income tax utilize a tax credit? I'm sure there's a way, I just don't understand it. And does it make sense to consider expanding it beyond 50 employers, taking it to the 100 employer market, and also indexing it not for inflation, but for trend? Because we all know healthcare costs goes up significantly higher than inflation. And that's it, Madam Chair.
Thank you, Senator.
So I can answer a little bit of those questions. I guess I'll take your question about the number of employees first. So the answer is yes, it could be expanded. Typically, as we're discussing these pieces of legislation and starting with these pieces of legislation, it is about the 2 to 50 market, simply because that's the market where you see coverage not available, right, and you see coverage not offered, and not that that doesn't happen in the 50 to 100 market, but it gives the ability for a step to then expanding that once people understand how, to your point, how the tax credit works and how it will work for the employer. As to how the tax credit will work, I can't specifically answer that question for a couple of reasons. Number one, specifically in Texas, the legislation did not pass yet. So the legislation directs the Department of Revenue to do rules around how this will work. So can't answer that specifically. It's a good question, and it's something that will have to be discussed on a state-by-state basis as we work on these bills and as we work with the Departments of Revenue in the different states, depending on how it looks.
Thank you, Brooke, and thank you, panelists. Representative Oliverson is chomping at the bit to tell us about the tax
I can
credit.
answer your question. We don't have an income tax, but businesses do pay a gross margins tax called a franchise tax. So it's a $400 credit against the franchise tax. That was the bill that we filed this year.
Fantastic. So thank you all very much for your presentations. Great idea. Looking forward to anything we can do to help keep the costs down or to potentially even reduce them. It would be a miracle, but there have been miracles before. Next on our agenda, Peter is going to also speak to us on a separate topic regarding some CCIO priorities. If you could go ahead and get started. We are on a limited time frame. We have some model bills that we need to reapprove after this, but thank you very much.
Thank you, Madam Chair. And so I will try to keep this a little short then. But yeah, so I just want to, here we go. All right. Just want to start by, one, talking a little bit about just how much I appreciate the role of the legislator in this process. I come from Minnesota, and I've worked at my prior career at a state-based policy organization. I work directly with state legislators, and I know how important the state legislature is in obviously developing the laws for the state and actually developing the policies, and that's where the innovation happens with policy at a state level. And so most of what I'm going to talk about today is how state lawmakers right now can look to some flexibilities in federal law around 1332 waivers and potentially a 1333 compact. But before I get into that conversation, there we go. I did want to just touch base a little bit on where we are with the open enrollment period. These open enrollment periods for the individual insurance market and the insurance exchanges across the country opened up on November 1st, and we are seeing some higher premiums in that market space right now, but we still have a lot of affordable premiums out there. The average person is still, like that actually is in the market right now, is still going to see premiums that are actually less than $25. So there's still some affordability, some high level affordability in the markets, but we are going back right now to the standard Affordable Care Act premium subsidy structure. We are seeing the COVID-related enhanced subsidies falling away. And right now, and we made sure to have some flexibility this year to make sure people have time. We had originally proposed to have the open enrollment period go from November 1st to December 15th. We want to make sure that people have time to enroll, and so we extended that to January 15th. But if you talk to people, the one thing I want to make sure everyone knows is that if you don't get coverage by December 15th, you're not going to get January 1st coverage. And so I just want to be clear about that. And so with that, I want to jump in and talk a little bit more about 1332 waivers. And this is something I hope a lot of you are familiar with. Section 1332 of the ACA allows states to waive certain requirements under the ACA that allows states to set up some alternative programs. And this is an important flexibility for states, especially for the primary reason states have used it, and especially for this time when the enhanced subsidies are expiring and people are talking a lot about affordability issues in the individual market. So there's a lot of things you can't waive under the ACA. For instance, the guaranteed issue requirements, the community rating requirements, a lot of those sort of fundamental requirements around the individual health insurance market, you can't waive those, but you can waive some other requirements. You can waive things around the essential health benefits. You can waive things around the premium subsidy structure. And so you can provide some more flexibilities in plan design. And so those are really great, but one thing that is now clear and has clearly provided a huge benefit for the states that have done this is the ability to implement a reinsurance waiver. 18 states have implemented a reinsurance waiver. In 2017, in 2016, I was in Minnesota and I was working on policy issues in Minnesota, and we saw a huge spike in premiums, just like many states are seeing today. We saw a huge spike in premiums. We knew we needed to do something to provide some premium relief. And we ended up relying on a reinsurance program. And the way that it's structured within this framework is we actually waive the single risk pool requirement in the ACA. And in doing so, you can then provide state contribution to a reinsurance program that pays high-cost claims. And you pay high-cost claims that usually are in a range, usually starts at an attachment point, say at $50,000, and then pays a portion of the claims up to a cap, which is usually around $250,000. And when the state pays a claim, that reduces the premiums, which then would reduce the premium tax credit the state would otherwise receive. And when the state reduces the premium tax credit, within the ACA, there's an allowance for pass-through funding. And so then you're able to get federal funding, federal pass-through funding, to help leverage those state payments that reduce premiums even more. And so in the state of Minnesota, when we did this, we were able to reduce premiums by about 20%. And when you look at the states across the country that have the lowest premiums on the individual market, the last time I checked, I think 8 of the 10 most affordable states in the country had a reinsurance program. So I want to make sure everyone understands that this is an option for your state going forward. We implemented 18 of these reinsurance waivers. I believe at least 17 in the first Trump administration. We definitely encourage states to look at this option. In under 1332 waiver, there's also other opportunities, and we are happy to work with states on some other opportunities. We released in the first Trump administration some concept papers about how to maybe use different type of waivers, so you could maybe use more of an account-based approach. We talked about health reimbursement arrangements and how they provide some more choice and opportunities. You could create some different subsidy structures around an account-based approach. You could also change some subsidy structures to encourage young people to sign up for coverage. And I'm happy to speak to any of those ideas with anyone after, later. I'm definitely willing to have some calls and about other opportunities. So there's that. I also want to speak briefly to 1333 compacts. The Affordable Care Act also provides the opportunity to basically buy insurance across state lines, which is something that Republicans have talked about a lot. But the compact approach is a little bit different approach, which does this in a way that actually it was pretty much a bipartisan approach to the idea of buying insurance across state lines before the Affordable Care Act passed. It was really a program to help smaller states create a larger market space to be able to attract more issuers into their markets and to make it easier. And because it basically allows you to potentially equalize some of the requirements and a lot of the administrative procedures around form filing and those sorts of things within the insurance space. And so it fundamentally allows for that sort of thing. Another thing it can potentially do is it can also potentially allow the group of states that create these compacts to bring back some level of federal authority that exists around qualified health plans. We've seen from administration to administration that there are basically certain things that just sort of flip-flop from administration to administration, and that creates instability, regulatory instability. One of the things states consider is grouping together to take some of that flexibility back. We've seen regulatory instability around network adequacy requirements, around the requirements around standardized health plans, and states can potentially bring some of that regulatory authority back to sort of remove themselves from some of this flip-flopping that happens from administration to administration. So there's some potential there. And so that's just a very brief overview of that. Please come to me if you have any questions regarding that. And to conclude, I heard about a thriving market for how to create that thriving market, and we talked about like the affordability of premiums. I just want to conclude with just sort of a vision. This is a vision that I have for the individual market. When the Affordable Care Act passed, the Affordable Care Act really kind of envisioned that there would be a subsidized portion of the market and an unsubsidized portion of the market. We are now at a place where we're largely a subsidized portion of the market. where you don't have a very large number of people who are paying the full premium and communicating the value of the full premium to them by actually paying that full price. And in any market, competitive market, you need a consumer that's paying the full price to communicate the value of the product that's being sold on that market. And without unsubsidized people in the market, that market will lack competition. And that's one of the reasons why I think we're seeing premiums go up as much as they have over the course of the time the Affordable Care Act has been around. If you had more unsubsidized people in the market, you'd have more competition to drive premiums down. And that's one of the reasons why I'm so excited about individual coverage HRAs. And I really encourage you to think about individual coverage HRAs, because I do think, yes, premiums are going up this year. They have stalled, I will note they stalled over the past 4 years. We're kind of playing some catch up this year, but they are still going up more than we would like. And I do think this can help. So with that, I will take any questions if you have some time.
I have a few. So we discussed earlier and in other sessions about the 1332 waiver reception with the current administration, but I think we ought to reassess that. What is your sense of what this administration is thinking about doing with respect to additional 1332 waivers?
We are open for a lot of ideas on reinsurance, on whether it's reinsurance waivers and maybe some modifications to that, or other types of waivers. We have regulations in place that are more restrictive than I think we'd like to see. So we're thinking through whether there's some more flexibilities that we can provide through future regulations. But right now, we do have, there's a lot of stuff that we can still do under the current regulatory structure. And so that's how we're operating right now. But we're definitely looking for some advice on where states think we should be going to provide some more flexibility on 1332 waivers, because we ultimately do think that states are where this sort of policy should lie. I think when it comes to the individual health insurance markets and the small group insurance markets, these are state focused, and states are in the best position to regulate in this space. And so we think it's better policy, to the extent we can, to devolve authority back to states. And you can do that through 1332 waivers. You can do that through 1333 compacts. And so we're just looking at ways to make sure states have as much authority to do that as possible under the law.
Thank you. My next question is with respect to mandates. So there was a discussion previously about state mandates and how after the ACA and the marketplace as it was developed, that the states were supposed to absorb additional costs associated with new state-level mandates. Has CCIO done any analysis on what those look like, and if it was actually charged to the states, how much that would be?
So are you referring to the defrayal requirements under the ACA for essential health benefits? So right now, when in the first Trump administration, we asked states to do some better accounting for that. And that regulation actually got pulled back by the Biden administration, but states are still supposed to be defraying the cost, and that's not really a change right now to the system. And so if there's a benefit that a state requires and it's not an essential health benefit, then the state's still supposed to defray that cost.
And then my last question has to do with ACA mandates that may have driven cost. Is there any research out there showing mandates that don't have significantly better health outcomes or large level health outcomes but are driving costs?
So evidence as far as like the ACA mandates, so the ACA requires the essential health benefits, and the extent to which, is the question then to the extent to which the essential health benefits have driven costs up? So the essential health benefits provides, and so the way that the Obama administration put the regulations in place, they allowed states to choose a benchmark plan. And for the most part, most states are still operating under the benchmark plans that they chose or something similar. And that benchmark plan was tied to a small group. Basically the default was the largest small group plan in the state. And so most states are under that framework. And so that is that is often a lower benefit plan. It's still has good benefits, but compared to some maybe large group employers or the federal health benefits that are available, which those were also options, there may be a little bit lower benefit. And I haven't actually seen any research out there to suggest that the individual market benefits before the ACA were that much different from the essential health benefits after the ACA in terms of driving up costs.
Interesting. That's not the feedback I got. Senator Utke?
Thank you, Madam Chair. And Peter, I got a question for you. When you mentioned the 1333 compact and the fact that I heard it say possibly being able to buy health insurance across state lines, wouldn't they have to, use my North Dakota friends here as an example, if I was buying insurance from the North Dakota side, but wouldn't they have to sell us a plan that meets the Minnesota set of benefits? Or is this compact something that allows us to pick and choose different plans according to what's being sold in that home-based state?
So under some notions of basically buying insurance across state lines, and when you heard a lot of people talk about this in the past, one of the selling points is, and this is what I would call a preemption approach to buying insurance across state lines, where say the federal government were to step in and require this to be provided, where a consumer could choose whichever state they wanted to, and when if they chose North Dakota, and it had fewer benefits and they were in Minnesota, then they could choose the plan with the fewer benefits if they wanted to maybe choose a lower premium option with less benefits. That is one, and if that was a federal approach and the federal government required that, then yes, that's how that would work. But the compact approach, one, depends on North Dakota and Minnesota agreeing on it together. And so if Minnesota and North Dakota wanted to create that arrangement under a compact, they could. And I didn't get into the details, for time reasons, on how the compact operates, but it basically, the way the statute's drafted, it says that you can enter into a compact to allow the sale of a QHP into another state, and only the laws and regulations of a qualified health of the state where the qualified health plan is issued or written will apply. However, there's important exceptions. And these exceptions make sure that the state where the person lives, where certain requirements are still applied from the state. First off, the insurance company still has to be licensed in the state where the person lives. And also very important consumer items like if a consumer has a complaint, they still go to the state where they live. Other requirements where we think the state's probably where the person lives is better equipped to make determinations, like network adequacy and rate review. Those things still stay with the state where the person lives. And so there's those exceptions in place. But something like the essential health benefits, that's something like the benefit structure could differ between states if the states agreed to allow that. But the states would have to agree to that. So there's a lot of things that might differ, but there's also some things where the state retains control. And I should add, within that structure, there's also guardrails, just like the 1332 waivers, that to be able, for the federal government to approve it, the compact has to meet a set of guardrails that make sure that any compact provides coverage that's at least as affordable and comprehensive as they can get under the Affordable Care Act, and also provides coverage to at least the same number of people as under the Affordable Care Act, and also it can't increase the federal deficit. And the final thing is that a compact can't weaken the state protections under those exceptions that I just talked about.
Okay. Thank you, Madam Chair. I got one more. Is anybody doing this currently? Any states? Nobody
is doing this currently. the ACA actually required regulations to be drafted by, I believe, January 1st, 2012, or maybe it was 2013. That didn't happen. And so there's actually no federal regulations on the book. But we're currently looking at compacts right now, and so we looked at this in the first Trump administration, but there's still no regulatory structure. But I'm encouraging states right now to start thinking about compacts because we're looking at issuing regulations, and so we're actively looking at that. And so we just want to make sure states have a heads up that, hey, look, this is an opportunity under the statute, and we want you to start thinking about it right now because your state legislators, you're looking at January, many of you are looking at January for your sessions to start, and if you want to start this process, one of the key things under the statute is you have to pass a state law to get this going, and so you all are very important in this process, and so want to make sure you have a heads up on that.
Thank you, Peter. We appreciate your time.
Okay, thank you.
Next up, we're going to bring up Commissioner Mulready and Robert Redpath of NSTAR to talk to us about we have a readoption of a model law, the Insurance Business Transfer Model Act. Welcome, gentlemen. So this model was initially adopted in 2020. It's largely followed an Oklahoma law, which was considered very innovative at the time. They've been a leader in the IBT space. And go ahead and get started when you're ready. Thank you for being here.
Great, thank you. My name is Robert Redpath. I am a Senior Vice President at NSTAR. I actually did a presentation here back in, I think it was either 18 or 19, before the implementation of the Model Act. Really what I want to talk about is to do just an overview of what's happened since then. I'm going to be very high level, and then Commissioner Mulready, who's going to go second, is going to be a little bit more granular as to what Oklahoma has done. So,
Sorry, we threw him a curve.
sorry, we're just waiting for the correct presentation.
They're getting it in there now.
That's our fault.
There we go.
Great, thank you. And I know we don't have much time, so I may skip a few slides. So, just a little bit of just a reminder as to what the insurance business transfer, what the Model Act, what an insurance business transfer is. So basically, an insurance business transfer, we call them IBT. It's the ability to transfer a block of insurance business from one insurance company to another without the need for policyholder consent. The process, it's a very rigorous process, and this is the process under the NCOIL Model Act and also other states that have used, for example, Oklahoma, Rhode Island, that had statutes prior to the Model Act. So there are a number of key elements. You require an independent expert report. You require the regulatory non-objection of the insurance regulator of the transferring company, so the state where the business is coming from. You need the approval of the regulator of the assuming company. So, for example, Oklahoma, if you were going into Oklahoma, you'd need the insurance commissioner approval. After that, after the regulatory approvals, then there is a court approval process, which includes the notification to policyholders and other stakeholders, regulators, reinsurers, guarantee funds. And ultimately, you end up with a court hearing and an enforceable order. So just to reiterate, at the completion of this IBT process, all the insurance policies and corresponding assets, which would include reinsurance, are statutorily novated to the assuming company, and the transferring company, so the company that's transferred out, has no further liability to those policies, those policyholders. So, legislation itself. Prior to the Model Act, Rhode Island has a statute. They've amended it so it's much closer to the Model Act. Then followed Oklahoma. And then the Model Act was implemented, and then Arkansas, Illinois, and Georgia, they also now have the IBT Act. And Texas has had 2 attempts. It's passed in the House twice, but it's not made it through the Senate to date. Again, just a little bit of a timeline. So again, Rhode Island and Oklahoma. Then in 2020, this Model Act was passed, and Arkansas, Georgia, and Illinois, they followed the Model Act. Illinois did have some changes. They decided to exclude life, health, and A&H insurance. So basically, really what I wanted to talk about is, back in 2018, it was all very new. Since then, there have been 4 insurance business transfers, all into Oklahoma domestic companies, 3 of which I'll talk about that we at NSTAR did. We have a company called Yosemite Insurance Company. It's a 49-state licensed company, which we moved into Oklahoma for this process. So the first insurance business transfer we did was actually the most complicated. It was a mix of business. This was Providence Washington Insurance Company. It was also owned by NSTAR. It was the second oldest continuous writer, so it was something, I think 1799 it was founded, so a lot of old business there. We transferred all the remaining business out through this process into Yosemite. It was a mix of direct insurance, all commercial, so no real consumers involved. But it did involve a lot of notifications, and we did look back, in some instances, 50 years, looking back for old policies, which involved 60,000 notifications. Ultimately, the transfer went very smoothly. The only, the only difference here with this transfer was that New York has been reluctant to grant a license to Yosemite. That's the one missing state. So we had to retain the New York policyholders, transfer by way of reinsurance. The other transactions that have happened have all been assumed reinsurance. Again, 2 NSTAR and one of them with R&Q. And just of note, rationale, the 2 of our transfers were internal, so between intercompany, 2 different owned companies. But in both instances, what we did was we transferred all the policies out of a company, so it was all the liabilities were gone, and then we sold those companies as clean shells. There's a very big market for shell companies in the insurance industry. So I'm just going to finish up a little bit, just sort of like the why. Having done this now for the last 5 or 6 years, looking at some of the positives of actually the Insurance Business Transfer Acts. And really, what we've seen is it's a good method to restructure a group of insurance companies. It gives the ability to align portfolios. So if you think about some of the bigger insurance companies that have maybe 5 or 10 writing companies, there may be circumstances where it makes sense for them to streamline their business. They may have little pockets of types of insurance in multiple companies that they would prefer to have in one company. So that's one thing. The main thing we found, and what we did again with 2 companies, was it is a very good way of creating a clean shell company. What you're doing is you're making a clear division of old and new business. So historically, shell companies were sold with reinsurance. So effectively, if you were buying a shell company, you were also, the old business was being reinsured out to usually to the selling company. So it was done through reinsurance. So you had economic transfer of the business, but you never had full finality of that business. So if theoretically one of those 2 elements, the old company or the new company, if there was an insolvency, there would be all kinds of problems in the sense that either new policyholders could end up in an insolvency mixed up with the old policyholders or vice versa. This gives clarity. It cuts out disputes. Really what it is you can have finality, you can move, you can have a clean shell. Does not have to be any concern about the financial strength of the old company. The policyholders are split. The other thing, and again, 2 of the transactions I talked about, they were legal finality for companies who were looking to divest non-core books of business. So the R&Q transaction with Sentry, again, Sentry had a non-core book they wanted to move out. And the same with the Hanover Insurance Company, the last transaction we did They had some non-core business they were looking old legacy liabilities to get off and get finality. And then my final comment is the IBT, it's a very useful restructuring tool, but it may not be appropriate in all situations. It's just a tool. It's not, it's to be used carefully in certain situations. And with that, I will hand over to Commissioner Mulready.
Thank you, sir. Go ahead, Commissioner.
Thank you, Madam Chair. I have a brief presentation here, but you will first of all notice that my accent's a little different than Robert's. He's from southern Oklahoma, and I'm from northeast Oklahoma. This process started when I was in your seat 8 or so years ago, and myself and a state senator were at an NEIC meeting as legislators and learned about Part 7 transfers. These are transfers that have been done in the UK and in Bermuda and elsewhere across the country. There have been over 300 transactions done over the last 20 plus years without a failure, without a problem. And so it just made sense to us, and we thought, as legislators, this is a tool that could be in the a business tool for companies, and we need to do this back in our state. So we did, and we started with Senate Bill 1111 in 2018. That created the IBT Act. Now what I'm going to just hit on quickly is just how we have tweaked that. That's a technical term, but how we've changed that as we went along. And most of that was just learning as we went along. And so in 2019, we updated the language to require a specific listing of documents and things that are included in the opinion report. Robert just talked about the independent expert that's involved, and so this specified some things that should be included in that. Also made the application for that IBT confidential while we are reviewing it. So once it gets filed with the court is when that becomes public. But right now we have 4 transactions that are what I call in-house that are in with us. So those are confidential at this point. When they get filed with the court, those become public. And then in 2022, we modified and updated some definitions, expanded the definition for district court. The original legislation specifically cited Oklahoma County District Court. What we ran into was we had a judge that had been assigned to a case, and they were promoted up to the appellate court, and that just delayed that process till they assigned someone. We also had the situation with the pandemic. We were like 2 weeks away from a case coming before, and then the courts got closed. And so we expanded that based on population, so we now have 3 district courts that those could be heard in. Increased the number of days for notices. These are just some of those tweaks that were in 2022. Created a process for international locations. As you just heard about Part 7 transfers, this type transaction is very familiar elsewhere. It had never been done in the U.S. before we did that first transaction. But there are international players in this. Also clarified requirements for notification for the policyholders, and we added reinsurers as far as their notification process. When someone is notified of a transaction, we notify all 56 regulators as part of the NEIC. As Robert just hit on, it's the transferring state who has to, not approve it, they just at least have to have a letter of non-objection to make that happen. And then added language. This was related to guarantee funds having to do with policyholders outside of the U.S. We've now completed 4, as you heard. Those came from Rhode Island, Wisconsin, Missouri, and New Hampshire. First one was October of 20, and our last one that was finally completed was in May of 25. We have 4 in-house that involve Arizona, Wisconsin, and Connecticut. There's been a lot of attention because we are the only state that's been able to accomplish this. We have other states, as you saw, that have brought on legislation that have not been able to put a deal together yet. We are hopeful that other states will accomplish that, and this becomes more of the norm, a normal way of doing business in the U.S. And a couple looks at some of the differences quickly. Rhode Island's is a lot more limited than ours is. The business has to be in runoff. In other words, they have not sold a new policy in at least 5 years, and it's P&C only, not in the life and health business. Arkansas and Oklahoma permit transfers of both open and closed, and don't limit the line of business.
That final bullet is about corporate divisions, which is similar. It's a restructuring mechanism that some other states have. It is not IBT, but Illinois, Connecticut, and Pennsylvania do allow those. As mentioned, I think earlier, Illinois also excludes life and health. Their legislation was run in Texas. I believe next year there's legislation that's going to be run in Florida. So there's a number of states that are now picking up on this, and hopefully we'll lift all boats, as they say. I will say, too, the Restructuring Mechanisms Working Group at the NEIC, we've been working on a white paper on this. We hope to finalize that. We have a final draft right now. It has gone on for literally years, but hopefully in Florida at our next meeting, that will be finalized with that. And so I think that is about it. Thank you, Madam Chair.
Thank you.
Happy to take questions.
Thank you very much, Commissioner. This model law is on page 139 in your books. Are there any questions from legislators for our presenters today? Representative Carter.
Thank you, Madam Chair, and I may have missed this, but can you talk about the consumer protections again, or what guardrails, when you transfer in a block of policies from one to another, what guardrails do you have to protect the consumer interest?
Well, the first thing is the notification. So policyholders receive notification. There are requirements in the law and how that has happened. I will tell you that, as you just heard, NSTAR was our very first one, and they would come in with their communication plan, and I sent it back to Robert to say, no, it's not good enough. We got to do better notification. And because that was a block of business where, policies hadn't been sold in 35 years. There's not active business. And I teased Robert that I had 3 sons, and I was much harder on my first one than my last 2, and he's my first child coming through with this process, so we were a little tougher on him. But it really is about that communication plan. And the court approves it.
Yeah, I would agree, but also the court. I mean, it's a court process, the court approves it, and, people have the ability to come along and object if they want to, and there is full notification there.
I will mention, too, the phrase that I don't know that you heard here, but it's the key that we are looking at, that the independent expert is looking at, and the judge is looking at. That is that no policyholders are materially adversely impacted. That's a key phrase.
Thank you, Representative. Thank you, Commissioner. I see no further questions. Thank you, both gentlemen. I will now accept a motion to re-adopt this IBT model. We have a motion from the good representative over here, a second over there. All in favor, say aye. Aye. Any opposed? Model passes. Thank you, everybody. I appreciate it very much. We still have 2 other models that we need to look at. The Market Conduct Surveillance Model Law and the Market Conduct Annual Statement Model Act. Both of them very riveting. I have read them recently. They're in your binders on page 154 and on the website app. Are there any questions about those models? No, I don't see any questions. So do I have a motion to adopt the Market Conduct Surveillance Model Law, re-adopt? The good senator, is there a second? I heard a second over that direction. So we have a motion and a second. All in favor? Aye. Aye. Any opposed? No opposed. That model law passes. Okay, the Market Conduct Annual Statement Model Act. Do we have a motion to re-adopt that? Representative Carter moves. Is there a second? We have a second. All in favor? Aye. Aye. All opposed? Nay. Motion passes. Any other business? You guys want to hang out for a little while? Anything? Oh, come on, that was funny. Representative Oliverson, good. Thank you.
Sorry, thank you. I'll be brief. Thanks, Madam Chair. I raised an issue during the summer meeting in Chicago regarding the 340B drug pricing program. I know it's a topic that a lot of us in the room are interested in, care about, and are concerned about. And so I would propose that NCOIL should look at developing a policy requiring transparency in the 340B vis-a-vis some of the same data points that are communicated to the federal supervisors of the program be made available to our states as well, so that we can see the value of these discounts, how much money is being collected, and most importantly, whether or not that money is being spent on charity care and indigent care, which is what it's supposed to do. So I think it'd be a great idea for a model for next year, Madam Chair, and I'd give it back to you.
I completely support that. Thank you, Representative, for bringing that forward. Representative Carter.
Thank you again, Representative Oliverson. I will definitely work with you if this is something you're willing to take on.
I believe we've covered all our business. I don't see anybody else dying to speak about anything else. Is there a motion to adjourn? Lots of motions to adjourn. Is there a second? I'll second that. We are now adjourned. Thank you, everybody. Appreciate your input.